How you guys doing? What is going on? This is a quick update for the dollar and gold daily and weekly, and we want to try to make sense of what happened last week. Are we bullish? Are we bearish? Are we gonna be biased? Are we gonna be fair? Good deal. This is the dollar daily time frame, and I'm being like a broken record, but I am willing to be an open-minded when it comes to Elliott, just to let you know. But I will not be open-minded when it comes to divergences, because in the past we change the waves of Elliott, usually, sometimes, all the time. We try to know the rules, try to recognize the structures, patterns like triangles and all this stuff, and we change. The good thing about Elliott, as long as they don't violate the rules, you're okay. But some Elliotticians, they use the structure with the rules, which they're more precise. Yet I'm not gonna do that because these things change. I'm just gonna talk about them and see what's going to happen next. Anyway, so the assumption ABC became 2, 1, 2. Okay. What's bad about this 2? It looks impulsive. It doesn't look corrective, which means if that look continues, that means a lower low. Yet there is no violation, even though the structure looks different, but there's no violation. So I will keep calling this 2. So what's bullish about the dollar? The bullish about the dollar now is the price memory. It's very solid. The 92-ish is very solid. It's been a support for 5 years. It doesn't mean it never went below 92, but the 92 showed a place where the buyers gather many, many times in the last 5 years. So number 1. Number 2, which is more important to me, is the positive divergence with the stochastic and so many things, to tell you the truth. It's very obvious. Started in October until today. See what happened here? It's easy on the eyes, huh? It doesn't mean it's pretty. It's easy on the eyes to recognize. See? Okay, good deal. So what happened in the past? This thing happened in the past. We have a positive divergence in August. And this what happened. We had a positive divergence even from August to 4th, 17th. And this is what happened. And also we had another positive divergence, August 17th, September 1st. I would assume, yeah, okay. We could make this as the big not from this low, from August to September, so a month. And this what happened. A very violent move to the upside. It made bull flag right here, and it met the target. It became 1. This was an extreme place for sellers, and we could see it if I have a bigger chart. That's why it retraced. A lot of sellers sold here. So yeah, so a positive divergence is to be looked at. What's bullish about this thing? Nothing except the divergence. But Elliott wave is all about speculation, so we're speculating. All right, so same thing with the USD in a weekly time frame, and it's very, very obvious here, the divergence. Good things happened. We don't know what's gonna happen, but good things happen in the past. Maybe in the future, we don't know. You could see the 92, this zone. Even if you go back further, it's a big zone for buyers. And believe it or not, this is still in a bullish mode for the MACD. It's not bearish yet, and the histogram is still in the positive. Okay. Remember, this was the histogram in August. And now look at it here. This is divergence too. It shows weakness on the down move. Capiche? Good deal. So even if we plot the Bollinger Band, it will show us that invisible standard deviation support. See? So it's not all bearish, but there's no bullish action except the price memory, the Bollinger, and the divergences. I have a rule. I will never go against any divergence. I would not buy anything that has a negative divergence. I will not sell short anything that has positive divergence. It worked with me in the past. The rule number one is not to lose money. Always remember that. Always, as long as you have cash, you have power. If you have cash and knowledge, you have ultimate power. So why do I have to put myself into any harms, especially if I'm independent like myself? I don't have a benchmark I have to outperform. I don't have clients that on my case. Just relax, watch the chart. If you see anything against the chart, just turn to cash. So we talked about the positive things in a weekly and the weekly and the daily. Let's talk about gold. Yay! Another thing, another beautiful action, no doubt about that. So what's beautiful about this picture? That beautiful up move. Okay? Came with force too. Good? Good. So what's bad about this picture? Another beautiful thing about the picture. Let me see if I have the trend lines here. Okay. See that? You broke out of some resistance right here. So we have to, and you have a positive, you have a bullish crossover in the MACD. Good deal. Beautiful. So what's negative about that? The first thing is the volume by price. A lot of prices, a lot of things happened here. A lot of volume, and it's mostly selling. This shows resistance. So you are on the upper end of this seller's zone. Is it to be looked at? Oh yeah, absolutely. If you don't look at it, oh God, something wrong with you. Okay, so resistance, easy to see. Another thing is, look at the Bollinger Band. You know what? Let me put the Bollinger Band here so we can focus. Take out the volume by price. Change the color so it's easy to see. All right. See, it is outside of the Bollinger Band, and it has an indecisive candle, which is not bullish, by the way, and you know that. You know that already. Yet, and it closed outside the Bollinger Band. Yet, this is sometimes bullish. That means the standard deviation will go up. See, when it expands like that, it shows new movement, like what happened here. Okay, this is the only thing I can see. Yes, so it really does happen. So, but as far as the Japanese candles are concerned, now we have white candle, beautiful, bullish, Marbuzu, and you have a Doji, and it shows incision at the places of sellers. Okay. Weekly time frame, beautiful breakout, very obvious. Yet the MACD is still in bearish territory, and so is the stochastic. In conclusion, bullish action in the gold, but I will never touch it. Why? Because of the bullish divergences in the dollar, and some bearish divergences too in gold, and because of it's a place of sellers. Okay, so how does gold usually come out of these type of corrections? It takes time. Usually takes time, and I don't remember gold coming out of these consolidations where the dollar in positive divergences, not even once. Really, I'm being honest. So usually, so there's nothing wrong with this picture. This could be a big bull flag. Not, but yeah, bull, boom. I could see, you could see it in here easier. See, beautiful breakout in a bullish flag, easy to see. Yet the negative divergence tells me to watch out. Another thing I love to look at, as I explained it in how to trade gold like a pro, is to look at the seasonality. So usually gold go make a new bottom, like a new November bottom, lower than October. This happens 60% of the time. Okay? But 100% of the time, in the past 4 years, November is always a negative thing, all the time. The same thing, we could expand it to, okay, let's see, if we take it to 2012. We have higher, like it goes even lower, but 20% of the times. But if you think about it, it's always negative. So this is to be looked at. I promise you that. I promise. So this is you must think about that too. So I'm not gonna talk about the negative things in Elliott wave for gold. Because, as I said many times, Elliott wave changes all the time. But negative divergence and positive divergence don't change. Sometimes, actually all the time, you equate negative or positive divergence of an end of a move in Elliott. So this is an end of a move. End of a move. This is always happen all the time. End of a move. With the and also the higher the time frame for the divergence, the more credible it is. So good luck, everybody. I love you. I love gold. Please subscribe and like and share. I wish you guys the very best. Please don't hate me if you're a gold bug. And I love you all. I wish everything is gonna be just fine. This goes forever.